to the Trading Market Technicals Morning Call video for Thursday, February 13th. Pretty much of a mixed bag yesterday. Dow Jones down 30, Nasdaq up 10, S&P basically flat down 49 cents, and the Russell up $3.37. Seems like the markets are kind of waiting for the next catalyst. Now, speaking of the next catalyst, earnings season is unwinding. So it's going to be pretty tough to push these markets, I think, any higher than where they are. We did have a great retracement rally for the last, 5 or 6 sessions. So it's going to be a little bit difficult. Now, we are coming into some seasonal weakness. I want to just point that out. February is one of the worst months of the year. So since we had this bounce, I'm looking for, again, waiting for price to tell me, I'm looking for the markets to head lower again and probably rebuild its correction and probably take out the lows at one point. And we also have President's Day on Monday. And I did looked up the Traders Almanac and also stated that out of over 24 years, S&P has declined 75% of the time during the Friday prior to the long weekend. That is huge statistics. So if that's the case, I would be looking for further downside today and tomorrow, going into that long weekend. Now, obviously, guys, it's just history, and usually we try to see if history repeats itself, but anything could really happen here. But we are weaker in the overnight session. China had some weaker numbers yet again. And the Asia overnight session really took it on the chin, pretty much red across the board. Shanghai, Nikkei, Hang Seng, they were all down 0.5% to 1.5%. And we're getting a little bit of follow through in Europe. FTSE's down 49, and you got the CAC down 23, DAX down as well. So pretty much weakness across the board, risk off today. So it's going to be very interesting to see what happens. Now, we had set up some targets of where the ideal spot would be to be short. I'll show them to you in the charts. Obviously, if you're day trading, it's a different story. But if you are swing trading, you could have gotten short yesterday. And if you're okay to hold that kind of risk overnight. So I want to go into some indicators like we always do. Not much to tell you. Although I do see the bullish percent SPX right here actually went on a buy signal. Now, how do we follow it? Do we go out and buy the market? Of course not. What we are looking for is I want to see the bullish percent get separated from this 8 EMA. Okay, we need to see the 8 EMA start to curl up. Right now, it's not. It's pointing straight down, telling us that bearish momentum is still to the downside. This could just be a whipsaw. As you can see, we've had a couple here, somewhere in here. We had a signal. We went back up again. So we don't just go out and buy. We want the 8 start to cross over, and we want the bullish percent to just kind of curve lower and then go back up again, and that's your entry really to get long, right? We always want a confirmation, not because a moving average crosses to the upside. We want to get that little bit of a pullback, making that high or low, in this case being long, and then that's where your entry would be. But again, decent. But we've been here from this low all the way up. The markets are tired. You could see it in the price action yesterday. Now, take a look at the VIX. Well, VIX here is below the moving averages, below that 200. But I think that it does have room here to kind of stabilize and to get back up. Now, if we get back up above the 200, I think the VIX could at least challenge these highs here. And that, again, would put selling pressure in equities. Okay, so just keep an eye on that VIX. Let's take a look at the McClellan Oscillator. Really still in neutral territory, not giving us much of anything. Although, if the markets were to blast off higher, we could actually have plenty of room before we get oversold. And, of course, overbought and oversold down below. So plenty of room to go on either direction. And that's why I like to look at it every day. And despite it say, oh, it's neutral, it's not doing anything. Yes, but if the market does move higher or lower, does it have room before we get some sort of retracement rally or or a bigger move to come on the downside? And you can see here we clearly have plenty of room on both sides. Okay. Now, speaking of China, this to me looks like just all it is just a retracement rally, just a bounce, over an oversold bounce here. Now we got a black candle, and usually a black candle would signal possible reversal, meaning to the back down to the downside. And with the China, this is end of day yesterday, so Wednesday. So today's data will come at the end of the day today. Obviously, when the EEM opens up with the New York Stock Exchange time, this could actually start to begin to roll back over again. Now, when you see that, remember the emerging markets took the cue, took it, sold off first, and then our market sold off. So you need to watch what the EEM and China is doing. And if you don't have the data feed, you can use that by the FXI. Okay, and as you can see here, we are under some heavy horizontal resistance, as well as the 200-day moving average just above this horizontal resistance. And then we have the 50 coming in, looking like it's going to create some sort of a death cross here. So again, watch these two ETFs. Is going to be very important to get an idea of where this market may be headed. Also, stocks above the 50-day moving average. Take a look. Basically, just back testing here, guys. Yeah, we did get the cross. Right, we did get a signal higher, but again, nothing goes straight up or straight down. Now we could just literally just kind of double bottom or make an M formation, make a higher low from the previous low of where the market was, and then just continue higher. That's definitely possible, but I do think there's a little bit more downside, at least a retest of the lows, the current low, and then we would then reevaluate and see if the volume is picking up. What type of move is it? Is it lackluster to the downside, where there's really no selling? Then that would be pretty much create a buying opportunity. And again, we are coming into some seasonal weakness here in February, and we're in now. We are into the first week, past the first week, so we do have a few more weeks of weakness, which I think would set up real nice for a spring rally going into the summer. Going into May. So that's something that I'm looking for opportunity. But in the meantime, if that is the case, then we can look to sell rallies up until when that time comes. All right, so now let's go into the chart segment. And here is the concern. I showed this yesterday. We do have Fibonacci extensions and retracement here. So we have a cluster up above. So it's going to definitely contain this for a little bit. But if it breaks above there, your next spot is really going to be that 61.8% retracement, that 200-day moving average, which would put some definite downside pressure in equities. Okay, so we are basically out of it yesterday. So yen was pretty decent. So it was strong yesterday. So we need to really watch what the yen does. All right, now I wanted to show you a monthly chart. We are at the 1272 extension from the crash lows, okay, from the previous high. And this area here, that's 1760, which is this last month's candle's low. If we take that out, okay, and again, we have a long way to go, but the way the market's been running, 40, 50 S&P points between now and the end of the month is really not much at all. If we take that out on the monthly basis, and so that means we have an outside month reversal, right? We have an outside month on price action getting lower from here. I would suggest that we would see some further downside. So that's something I'm going to be watching now. Obviously, the month just started, so we will revisit that later on. Okay, now we have a little bit of movement here, really not much at all. And as you can see, volume again was dismal. We had the average of the 50, and we're still below it. So volume was pretty much dismal. And even this whole move higher, we had that one Friday, and then of course the couple days ago. And after that, everything else is pretty much not really telling us much. Now, as you can see, we're going into this overbought state, and the stochastics, RSI, didn't even quite get up above the overbought state. So this to me is showing some weakness here. See, when we rallied off the October lows, you can go back down here, you can see what happened. As we rallied, what happened? RSI stayed above 70, which is really telling me we have some strength here in the market, right? And then we dipped again and we got back above it. We dipped again, got back above it, and then we really sold off here in this area, and then we got back above it. Now look what's happening here. Since the beginning of January, we haven't even gotten above the 70. So to me, there's some weakness in the marketplace here. No question about it. So we said the 1820 level, and we did get a trigger yesterday. So if you are a swing trader, position trader, you should be short now. Or you should be looking to short the next rally. Okay, 1820, good spot. Look what happened. 1821 rolled right over. Let's take a look at the hourly chart. All right, hourly chart 1820 here. As you can see, this is my number. Good area of resistance. We also have the 78.6% retracement right up in here. And sure enough, we sold off. We had our crossovers. And now we should be looking to sell rallies today and tomorrow. And then, of course, we would reevaluate it. But take it one day at a time if you're a day trader. If you are swinging, then that is your cue. You should be short right now. Okay? Where are your stops? Obviously above the 1820. Let's say, I give it a couple of handles. 1823 above this high. I would be looking to put my stops. All right, but you got some great possible gains here, and targets are really down below. I mean, you get past 1797, 1800, your next stop's going to be right in here, that 50%, and that 1790 area, which would coincide nicely with the moving average here. Okay, now let's take a look and see what we have. Bonds moving lower, that's fine. We have gold moving higher. Not a good sign. But again, if you are in that gold trade like we talked about for the last, I'd say the last few weeks, I'd be tightening up stops or starting to look to take profits. I'll show you the GLD chart in a moment. But again, back testing here, all it is to me is a bear flag here, like I mentioned yesterday. Here is the weekly chart. Again, the longer term picture still looks fine. There's nothing wrong with it. Higher highs and higher lows within the channel. Now, if we break this low, which I think is pivotal, 1742, now we have reversed everything that we've had since 2012 and 13, actually, and now we're starting to head lower. That, to me, would be a bigger warning sign. Okay? We can go all the way back down to the 1740, guys. 1740, like I showed you in the ES chart, 1740 would still keep this uptrend intact, so remember that. Okay, here's the spiders coming right into resistance here. That's pretty much a 76.8% retracement from this low. You could basically tell right up in here. So this right now, it's going to be interesting to see if we can alleviate this little move or continue to move higher here, challenge the highs. I think it was a great move, first of all. I think the markets moved higher. It was fantastic. Very light volume, though. That's what I keep saying. That I think the move is suspect. Doesn't mean you can't trade it long, obviously. Okay, transports. Here's another thing that worries me, like I mentioned. The leader is not going anywhere. The leader hasn't led the other markets, so the other indices, and that's a big concern for me. Okay, take a look at the IWMs. Still below the 20-day moving average. The Russell ETF volume was okay. We did cross over here. MACD's making, histogram's making higher highs and higher lows. And we didn't get the crossover that we're looking for, but I think the markets are tired and due for a little bit of a pullback. Now, as I mentioned before, just for hypothetical purposes, we could move back down here, and if we can make that higher low from this previous low, this hammer, and then start to revert back up, that's a very good sign that buyers have stepped in, and then I would imagine that we would look to I would look for targets at the highs. Now, if we could even get back down to here. We just don't want to take out this pivotal low here. Okay, that's the concern that I'm waiting for, and that's what we're going to monitor when this market does roll back over again, if it rolls back over. All right. Lastly, is the Qs had a great move up. Into resistance here, thanks to Tesla, Netflix, Apple, and Google. They all moved higher the last few days. Now, I think the markets. Netflix took it on the chin yesterday. Google didn't do much. Apple was okay. Amazon really rolled over, had a big downgrade. I think that the Qs are now. If you are long Qs, I would be taking profits or at least tighten up stops. Just real quickly on the diamonds, again below the 50. Did get above the 20, but again, you can see some weakness here. And that's really, if I was swing trading, which I'm not, unless you're doing options or some kind of option spreads, I would definitely be tightening up stops if you are long from down in these areas here, because I think the markets are ready, at least going to try to roll over. And let's see where that move lower is going to end. Again, if we can end higher, make it a higher low from the previous low, that's going to be a very good sign. Buyers would step in. But remember, guys, seasonal weakness. We're coming in. February is the worst time, one of the worst times of the year. Just real quick, we'll run through some of the charts here. Getting really close here, right? We're just about about $4 away from the 200-day moving average. But again, guys, if you look back in here, you could see some supply. So I would tighten up stops here in gold. We mentioned gold was a long trade way back early February. I think it was even even end of January. So ended up being a nice little trade if you took it. And keep an eye on this area here. Let's just see what happens here. Maybe market sell off. Gold and silver will spike up one more time for that fear trade. And here's just the oil and gas exploration here. Starting to pick up a little bit, right? As you can see. Still needs a lot of work, but there's some good quality names here that I'm watching. And, of course, I'll share with you in the Morning Call video. Here's the XLE. Again, still bearish, right? Still bearish, right? Because we've broken this bearish rising wedge, right? I like it on better on the long side. Not yet, obviously, but we still have this bear flag. And we need to break the bear flag. That would confirm this whole big move lower. And then, again, we would look for at least a test of the 81.72 in the XLE. USO had a great big move up. I love the USO here. Now it's getting a little bit winded, right? Because we had this big move, we consolidated, and then we popped up here for the last 4 or 5 days. So you're not going to chase it. This is not a trade here anymore. If you are long it, I would definitely tighten up stops because we're now extended a little bit. And again, we're coming into this area. You can see this little thin zone that we actually pop back up. And we filled this thin zone, and we have some overhead supply again. So, to me, I would have been taking profits yesterday into that big move higher. And now we reversed here. So, I would probably look for, again, the next pullback into some sort of supply. And then we would reevaluate it again. Here's the home construction. Now, builders come into some seasonal weakness here up until the spring. So that doesn't mean you can't trade it, obviously, if you're just trading it for the day. However, if you're looking to build a position and you own it back in these areas, I would tighten up stops and let it come in and start building a new position for the spring pop. Okay, same thing with XHB, which is the Home Builders ETF. Now, Lennar here came back in again, filled the gap, obviously. I like to see it get back into these areas. I would love to see it come back into this symmetrical triangle here before we look to buy Lennar. So I'm looking for the builders. I'm looking for further weakness, and then I would look to buy into weakness going into the early spring months. Again, we're going into some seasonal weakness here in the builders, so I would stay away from it, unless, obviously, if you're day trading it for the day. Pulte Homes, love the Pulte Homes still. And here's KBH. Again, this hasn't gone. So when in fact, let me just grab that guy up there. When in fact they start to move, this will play catch up, and it'll play catch up in a big way. You can see here, look at the thin zone. There's so much movement, so much room. So target's a big target here, guys. I mean, you can literally at least challenge this little pivotal high or this high here. So I'm waiting patiently and watching to get into KBH again. XLF, what can you say? Did a great job on the retracement, but some of the banks really didn't move too much. Look at Citibank. I mean, it did move off the lows, obviously, but you're talking only about 3 points. We're still below the 50, so it needs a lot more work before we look to enter the banks again as well. JP Morgan, definitely one of the better banks, but again, guys, remember, we're getting into some weakness here, so let's take a step back and let's reevaluate. Still be looking for best trades possible, the best trade setups that you have, and just kind of manage them accordingly. Again, because the market is kind of iffy right here, and I would love to see a 10% correction. If we could see an 8 or 10% correction between now and the end of the month, and then that would set us up perfectly to start buying longs going into the spring. All right, and then lastly is Apple, as you can see. Did quite well here on that buyback news. All right, guys, big snowstorm here on the East Coast. If you are on the East Coast, I feel your pain. I'm out here as well. Be very careful out there. This also will exaggerate any moves. There's a pretty much state of emergency here, New York, New Jersey, tri-state area. That is going to put a lot of traders home, working from home, if at all, so that the moves are going to be extended. All right, they're going to be exaggerated, so just use caution. Remember that, okay? All right, guys, have a great day. Be safe out there today, and I will speak to you tomorrow. Take care.